Hey everybody, JJ here, Bull to the Bust. It is still Tuesday, March 24th. Back for an evening update here. Today was just an insane day. This kind of piggybacks off of our previous report, but we have a lot of new news to cover here. The stimulus has just went crazy now. We're talking about a $6 trillion injection into the economy. We're going to talk about that. Today actually was the biggest jump in the Dow Jones in 80 years. We're going to talk about how that may or may not be such a good sign, and we're going to look at some charts on that. And also we're going to talk about the update on the quote-unquote working class bailout, or the stimulus, the people stimulus as some are calling it. And it's been improved and it's been repackaged, but it's not yet finalized. But let's go ahead and talk about today's news. So today the Dow Jones 2,200 points. S&P also had a nice day, up over 9%. NASDAQ 8%. Gold skyrocketed up to $16.22. Oil recovered a bit, $24 on oil. Now looking at this surge in the Dow Jones, today the biggest jump in 80 years. But let's take a look at a chart here. This is out of CNBC. Now first of all, like we talked about in our previous video, if this doesn't show you that this is manipulated, you really need to pay attention, because this is obvious, right? We haven't even struck a stimulus deal yet. Just the talk of it possibly happening pushed this market up. Now this is the best day since 1933, and this is the yellow line right here. But if you look at the other big days, they all happened right around the time of either a depression or a financial crisis. Okay, you see the biggest one here in 1933. The second biggest leap in the Dow Jones, 1931. 1929 was the third biggest, all around the Great Depression or soon after. The other big ones here, 2008 financial crisis, we see that. We see another one in here, 1932, 1931. 1987, I believe that was a savings and loan crisis. Another one from 1932. So, as I've said before, we do get these big volatile moves at the peaks of depressions, or at the peaks of bull markets, before we get into either a recession, financial crisis, or Great Depression, according to history. Now, I'm not saying it's going to happen again, but today's move is evidence and very similar to what we've seen at the end of bull markets. Okay, there's different names. Dead cat bounces. Others call them sucker rallies. It suckers people back into the market. But what would happen if this thing was manipulated when they passed this huge stimulus package? Okay, remember the Fed, they're trying to be out in the front of the market this time. Unlike the 2008 financial crisis, they didn't lower interest rates and start pumping stimulus into the TARP bailout programs and all those other programs that came along at that time. They didn't start doing that until after there was already blood on the streets. People were losing their homes. People were losing their jobs. The stock market crashed. This time they've been out in front of it. They've been stimulating the banks, or injecting liquidity into the banks since September. They started lowering interest rates sooner, even though they tried to raise interest rates for a brief period. They started the lowering cycle much sooner into the cycle this time. Now, part of this big jump was the hope of this stimulus package. It is now up to $6 trillion. Now let's take a listen to Larry Kudlow over here. Monetary Mayhem over on Twitter tweeted this out, but the clips are pretty widely circulated right here. Take a listen.
Treasury's exchange stabilization fund, that will be replenished. It's important because that fund opens the door for Federal Reserve firepower to deal a broad-based way throughout the economy for distressed industries, for small businesses, for financial turbulence. You've already seen the Fed take action. They intend to take more action. And in order to get this, we have to replenish the Treasury's emergency fund. It's very, very important. Not everybody understands that. That fund, by the way, will be overseen by an oversight board and an inspector general. It will be completely transparent. So the total package here comes to roughly $6 trillion, $2 trillion direct assistance, roughly $4 trillion in Federal Reserve lending power. Again, it'll be the largest Main Street financial package in the history of the United States. Liquidity and cash for families, small business, individuals, unemployed, to keep this thing going. We're heading for a rough period, but it's only going to be weeks, we think. Weeks, months, not going to be years, that's for sure. And hopefully pave the way for continued economic recovery after this crisis departs. Thank you, sir.
So there you had it. They're using the Fed's, quote, firepower. Now ask yourself, first of all, $6 trillion, that's huge. But if you would have asked this to an economist back at the end of the financial crisis about 12 years ago, if you would have ever seen such a massive stimulus, $6 trillion, this already blows away the entire bailout that we saw in the financial crisis. And that was outlined very well in this other CNBC article. The Fed is providing way more help for the markets now than it did during the financial crisis. And we haven't even really seen the blood on the streets yet. I think we may, if the Fed doesn't increase their firepower, what they're calling it. But isn't it amazing? No one would have ever guessed $6 trillion in stimulus. But what if they bump it up? What if it's 10 million? What if it's 20 trillion? Right? This is completely manipulated, and I've said this 1,000 times. They had unlimited firepower they can throw at this. So there's no reason why they cannot pump the system back up. The stock market, sending money to Americans, if they want to. And ask yourself, with the president being in the first term, don't you think there's a pretty good reason why they may want to pump it back up? Right now, again, the Fed, they cannot put food on the shelves. We're likely going to see inflation come out of this, and that could be something that even the Fed can't fix. No matter how much money they pump into the system, if prices start rising and wages remain stagnant, or if the middle class bailouts aren't enough, you could still see this fall apart. But it doesn't mean they're not going to try, and that's what we have to take a look at here. Now, let's touch on a little bit of other news here. There are actually companies hiring right now. Walmart, CVS, Domino's. They are hiring during this pandemic. So people stocking up on goods. And we're going to talk about the toilet paper rush here in a minute, an update on that. But there are places hiring now. Of course, these places are not the best paying places to work typically. But if you're barely hanging on by a shoestring, it could be, the thing that gets you through this, especially if you don't have a lot of bills or a lot of overhead. If you're just a single person and you're living somewhere with low rent, this could get you through it. Right? So there's always companies that benefit no matter what the type of market you're in. The Dollar Tree is hiring. I heard the Dollar General is hiring. Big rush to dollar stores, with this whole current panic right now. Also, take a look at this stock here. This is a company called Blue Apron, and they do some sort of food home delivery for recipes and stuff like that. But this stock went up from $2, surged up to $16. Now, I'm currently shorting this via a put option because I think it's going to go back down. But the fact that many people are now ordering food from home instead of going out made this stock go from $2 to $16. I started shorting it right around $14, I believe, right around here. And if I'm wrong, I'll lose. But if this pandemic starts to fade away into spring and summer, this stock's probably going to go right back where it started from, back down to the $2 range. So Blue Apron, if you're interested in trying to, I'm not recommending this because, anything could happen. The sickness could get worse. And this stock could go up even higher. But this is my bet. I'm kind of playing this. The ticker symbol is APRN. If you're interested in maybe trying to benefit or profit from this situation right now. Also, remember this, the toilet paper rush from about a week or two ago. We did an update on that. Well, now a lot of people have realized, hey, I bought too much toilet paper. I'm going to try to take it back. And guess what? Costco is not taking returns on the toilet paper. So these people that panicked and bought all this because I guess they thought this was some sort of diarrhea virus, they are panicking even more now because they have way too much toilet paper than they're ever going to need. Or I guess they're set up for a few years supply here. And Zithlord posted this over at Twitter. This is the actual sign up at the Costco. Returns not accepted: toilet paper, paper towels, sanitizer wipes, water, rice, and Lysol. So sorry to all of you wannabe last minute preppers that you went out and bought so much toilet paper. All right, just start eating a lot of beans and I'm sure you'll find use for it. Also, this is out of Slate. It's reported here that the new stimulus bill is going to give unemployed workers an extra $600 per week. So we are getting closer to this UBI type of assistance for workers, for Americans. Right now they're saying just through the pandemic, But what if the pandemic doesn't slow down? This could be going on for a long time if this part of this bill passes in this big stimulus package. Lastly, if you are looking for silver, there's still major shortages happening. This is SD bullion. Right now it's all sold out here on these except for this one. This is a 5-ounce silver coin. You're looking at 103 on that. If we do end up in hyperinflation, people holding hard assets, precious metals, gold and silver are going to be at least having something of value to increase along with inflation. If you're just stuck in paper bills and you see hyperinflation, you're going to be in a very bad position. So I'll put a link down there to SD bullion. If you do buy through that link, it does help out the channel a little bit. And the spot price is very detached right now from the physical price. You're seeing shortages and you're seeing prices rise. So I'm actually buying more right now. I'm getting in before prices go up even more. They might drop again, but in the situation we're going into, I don't think it's going to be dropping too much on the physical. Of course, the paper, that can be manipulated, but not the physical. All right, hard assets. They also still have pre-orders happening for the 1 ounces. Those are my favorites because I feel they are going to be more easily tradable in time of when bartering is going to be necessary, when shelves go empty and you're out there looking for food, looking to survive. All right, everybody, thanks for watching this update. Let me know what you think about the no return policy at Costco. Is that bad? Do these toilet paper preppers need to, should they be able to return their items? What do you think about the $6 trillion stimulus, the huge stock market gain, biggest jump up in 80 years? Crazy, insane times that we're living in. Hope to see you back here for our next report on this economy and this utter madness that's happening. Bye, everybody. Hope you're well. Bye for now.